When it comes to investing, the first thing that probably comes to mind is investing in the stock market. Pero medyo complicated pa rin ang mag-invest sa stock market kasi kailangan mong pumili kung ano bang mga companies yung bibilhin mo at kailangan mo rin mag-decide kung kailan mo siya ibebenta. A simpler way to invest in the stock market is by investing in equity funds. Pag sinabi nating equity fund, it can be a mutual fund or a unit investment trust fund, and ito ay isang pool of money from different investors that is being managed by a fund manager, at ang ginagawa ng fund manager or ng fund company ay sila yung namimili kung anong mga companies ang bibilhin sa stock market at sila na rin yung magde-decide kung kailan nila ibebenta. So in your case, you are paying a management fee or an admin fee in exchange for saving time in analyzing and studying the economy and the different Philippine companies in the stock market. So if you want to experience a similar growth as investing directly sa Philippine stock market without really putting in the time and effort in studying the different companies in the Philippines, then you can definitely invest in an equity fund. Today, we'll know more a little bit about equity funds, starting with the different types of equity fund. Ang equity fund kasi marami din siyang iba't ibang klase, depende kung ano yung binibili ng fund manager. The first type is the index fund. When we say index fund, it's an equity fund that primarily invests in the Philippine stock market index, or it only buys the companies that are in the top 30 companies in the Philippines. Ang objective ng isang index fund is to mimic the performance of the index. So kung mataas ang ekonomiya ng Pilipinas, tumataas, then you can expect that index funds to also grow at the same rate or at a very close rate. Ang isang example ng index fund ay yung BPI Philippine Equity Index Fund. Basically, pag nagtanong ka ng mga iba't ibang funds, kapag may nakalagay na index dun sa name niya, that's probably an index fund. Furthermore, meron kang nabibiling company sa Philippine Stock Exchange mismo, yung Exchange Traded Fund ng First Metro, yung FMETF. That is also considered an index fund. The second type of equity funds is yung growth funds. Kapag sinabing growth fund, ang binibili ng fund manager dito ay iba't ibang companies, and ang goal niya is to buy those that have the greatest or the highest potential to grow over the years. Ang objective ng isang growth fund ay ma-outperform niya yung index. And equity funds are actually the best option if you want to grow your money significantly over many years. If you're investing for your retirement, for example, then choosing an equity growth fund is the best option. Examples of this is the PhilAm Strategic Growth Fund at yung Atram Alpha Opportunity Fund. Medyo mahirap malaman kung growth fund ba yung isang equity fund, and it's better to just ask the provider or the company itself kung ano ba yung objective niya at ano bang mga companies ang binibili doon sa loob ng fund. But in general, kapag merong word na growth or opportunity or prosperity doon sa pangalan ng fund, then that's probably an equity growth fund. The third type of an equity fund is yung mga dividend funds. Ang goal naman nitong equity fund na to is to invest in companies that give high dividends or regular dividends. The goal of a dividend fund is price appreciation or growth for your money, but sometimes they could give out dividends as well to the investors. So it's better to check with the fund company itself to know if they do give out dividends regularly or every now and then. Some of the examples of dividend funds is yung BDO Sustainable Dividend Fund and the PhilEquity Dividend Yield Fund. More often than not, there's the word dividend in the name of an equity fund, and that's a sign that you're investing in a dividend fund. The fourth type of an equity fund is yung mga cap fund or mga capitalization fund. Merong mga small cap, mid cap, at saka mga large cap equity funds. Pag sinabing capitalization, it really depends on how big the company is. So a cap fund primarily refers to the size of the company it invests in. A large cap equity fund will invest only in large, well-established companies in the Philippines. Not necessarily those that belong in the index, but those that really have large capitalization and a long history of existence. An example of this is the Union Bank Large Capitalization Philippine Equity Fund. Meron bang difference and ano ba yung pros and cons ng pag-i-invest sa mga small, mid, and large cap companies? In general, if you invest in an equity fund that focuses on small cap companies, these are young companies, then there's a lot of potential for further growth or significant growth in the future. Meanwhile, yung mga equity funds that primarily invest in large cap companies, these are already stable, well-established companies. So there's little or minimal volatility during the following years. The fifth type of an equity fund is yung mga sector funds. These are equity funds that primarily focus on a specific sector of the economy. Kung ang isang equity fund ay puro real estate companies ang binibili niya, then that's a real estate equity fund. A good example would be the BPI Philippine Consumer Equity Index Fund. So, malalaman natin na this is an index fund. So, it primarily buys companies that are in the Philippine Stock Market Index. Pero, meron siyang additional criteria, which is yung consumer equity fund. So it only buys yung mga nasa Philippine index that belong to the consumer sectors such as Jollibee, San Miguel Corporation, and Pure Gold. It's interesting to invest in sector funds because you can take advantage of particular sectors that do well during times of crisis in the economy. For example, during the pandemic, yung mga consumer companies, they actually did well because they are considered basic necessities and people continue buying groceries, buying food, etc. So if you invested in a consumer equity fund during that time, then you would have done very well in your investment. The sixth type of equity fund is yung mga global funds. So these are equity funds that invest in other economies. Nag-i-invest sila sa US, sa Europe, South America, etc. So if you want to diversify and probably take advantage of the growth in the economy in other countries, then you can consider investing in a global equity fund. Yung mga global equity fund, they can be dollar denominated or foreign currency denominated. Pero meron din kasi mga Philippine peso denominated na mga global equity funds already in the Philippines. Isang example dito ay yung Sun Life Prosperity World Voyager Fund na nag-i-invest sa mga companies that belong in emerging markets. Another example is the Atram European Equity Opportunity Feeder Fund, which invests primarily in European equities. So paano nga ba mag-invest sa isang equity fund? There are actually 5 ways that you can invest. The first one is through commercial banks. Punta ka sa sarili mong bangko, tanungin mo kung nag-o-offer ba sila ng mga unit investment trust funds, mga UITF, and I'm very sure they have an equity fund in their list of products. The second way that you can invest in an equity fund is through an asset management company. Basically, this is investing directly dun sa UITF or dun sa mutual fund company. The third way is through life insurance companies. So kung meron kang kilalang financial advisor in a life insurance company, tanungin mo kung licensed din sila na mag-offer ng mga investments. So you can probably invest dun sa mga equity funds that the insurance company offers. Or if you're getting an insurance policy with an investment component, you can also ask your insurance agent or financial advisor kung ano ba yung mga options for the investment part of your policy. If you're investing for the long term for your retirement, it's best to put the investment part sa isang equity fund. The fourth way that you can invest in an equity fund is through stockbrokers. Yung mga stockbrokers usually may mga mutual fund na arm sila, and you can definitely invest in different types of equity funds there. If you already have a stock market account, you can actually invest in an index fund. Yung nabanggit natin kanina, yung FMETF or yung First Metro Exchange Traded Fund. That's a company that you can trade in the stock market that is actually an index fund itself. Lastly, you can invest in an equity fund through local licensed distributors. Meron dito yung Ramp Financials or yung Seedback PH and yung Call Fund Source, which is an arm or a sister company of the stockbroker na Call Financial. Usually, yung mga licensed distributors, merong mga agents din sila, may mga certified investment solicitors. So definitely, you can invest in an equity fund through them. When you are investing in an equity fund, what's important to remember is this is a long-term investment. So ang stock market, high risk, which means that investing in an equity fund is also high risk, which is best if you are investing for a long-term financial goal. Kung ang financial goal mo ay long-term, meaning within the next 7, 10, or more years, then investing in an equity fund is a good option. Examples of this is investing for your retirement or preparing for the college education of your child. So, kung long-term yung financial goal mo, then it's best, and I would actually say na I recommend investing in an equity fund. That's it, and I hope ay marami kayong natutunan tungkol sa equity funds. Kita-kita ulit tayo sa next video natin at sa next live stream natin. Bye-bye!